All right, today we're diving into a really powerful trading strategy, one the pros use all the time. We're going to learn how to take one of the most frustrating things that happens in trading and actually turn it into your biggest advantage. Let's get right into it.
Okay, first up, let's talk about a classic trap. Seriously, this thing catches so many traders, especially when they're just starting out.
So let me ask you a question. Have you ever done all your homework, found what you thought was the perfect setup, and you put on your trade feeling super confident, only to watch it completely blow up in your face for what seems like no reason at all?
Yeah, I'm sure this sounds painfully familiar, right? You see a really strong support level, so you decide to go long. You do the smart thing, you place your stop loss just underneath it. Then the price dips just enough to hit your stop, kick you out of the trade, and then, almost instantly, it reverses and just takes off in the exact direction you predicted. It is absolutely maddening. But here's the thing, it's not random.
And this is where the huge difference in perspective comes in. See, a retail trader looks at that obvious support level and thinks, perfect, it's a textbook buy signal. But a professional trader or a large institution, they see the exact same thing and think, oh, look at that, a giant pool of predictable stop-loss orders. That's exactly the liquidity I need to get my huge position filled. They're playing a totally different game.
So what is this invisible force that the big players are hunting for? Well, the secret, the thing that really fuels the market, is something called liquidity.
You know, in the simplest terms, liquidity is just all the pending orders waiting in the market. Every single time you place a stop loss or a limit order, you're actually adding liquidity to the market. It's the fuel that allows millions and millions of trades to happen smoothly every single day.
Okay, so here's why this is so important. When a pattern on a chart looks super obvious, like a perfect double bottom, tons of traders all do the exact same thing. They all buy, and they all put their stop losses in the same predictable spot, right below that support. Well, what does that create? It creates a dense pool of sell orders. It's a liquidity pool. And the big institutions, they need that pool of sell orders to fill their massive buy orders without moving the price too much. So they'll intentionally nudge the price down just enough to trigger all those stops. That's the stop hunt. And understanding this, that is how you flip the script on them.
So now that we get the why behind all this, let's get into the how. I'm going to walk you through a simple 4-step plan to help you start trading with the big money instead of against it.
And look, you got to follow these in order. It's really important. First, we confirm the trend is on our side with a break of structure. Second, we find the origin point of that big move, which is our supply or demand zone. Third, and this is the key, we find their target, the liquidity. And finally, we put it all together and plan our trade.
Step 1 is all about identifying a break of structure, or a BOS. That's just when the price pushes past a previous high in an uptrend or a previous low in a downtrend. But, and this is super important, a candle body has to close past that level. A wick just poking through? Nah, that doesn't count. We need a solid close, because that confirms the trend has real strength behind it. All right, so once you got that confirmed break of structure, you trace that move back to its origin. Where did that big, explosive move actually kick off from? That little area, often just 1 or 2 candles right before the breakout, that's your demand zone in an uptrend or your supply zone in a downtrend. This is our point of interest, because that's most likely where the big money place their orders.
All right, now for the real secret sauce, finding the liquidity. We're looking for one of those obvious textbook patterns, like a double bottom, that's sitting right above our demand zone. This is the bait. This is the trap that's set for everyone else. We know that tons of retail traders are buying there and putting their stop losses just below it. And that pool of stops, that's the liquidity that's about to get swept before the price ever gets to our real entry zone.
Okay, and last but not least, we put it all together into a trade plan. We are not chasing the price. Instead, we're patient. We set a limit buy order right at the top of our demand zone. Our stop loss goes safely just below that zone, just in case we're wrong. And for our take profit, a good starting point is to aim for 2 times your risk, or you can target that previous high that got broken. We set the order and we wait. We let the market do the work and come to us.
So once you've got that basic setup down and you're comfortable with it, we can actually level up. There's a more subtle, kind of advanced way to use this same exact logic. So remember in the basic setup, we were looking for those super obvious patterns, right? Like a double bottom. Well, in the advanced setup, the liquidity we're hunting for is actually a weaker supply or demand zone itself. Just think of it like this. You'll often see a small, minor zone that was created by a little price move, and it's sitting just in the way of a much stronger, major zone from a bigger swing. So the thinking here is that a lot of traders, they're going to see that first little zone and try to jump in early.
But for us, that minor zone is the new liquidity target. The plan is to let the price smash right through that minor zone, sweep out all the stops sitting there, and then we enter on the much stronger major zone that's waiting just behind it. It's the same exact principle, just a little more sneaky.
All right, as we start to wrap this up, there's one last thing I really want you to take away from this. It's a mindset shift, and it's probably the most important part of making this work.
And this is really the key to the whole thing. Please, don't just go looking for this perfect textbook picture on your chart, because the market is messy. It's rarely that clean. Instead, just focus on the rules, on the logic. Ask yourself, is there a confirmed trend? Is there a clear supply or demand zone? And is there a predictable, juicy liquidity pool sitting right there for the taking? If you can check those boxes, you might just have a setup.
So from now on, when you pull up a chart, I want you to see it differently. Don't just see support and resistance lines. Start asking yourself, where are all the stop-loss orders probably sitting? Where's the obvious trade that everyone is taking? And where is the liquidity likely to get swept? Thinking like that, well, that could change everything for you.